right, let's go, IC people. Thank you for joining us today. We've got an awesome panel for you. I'm super excited about this. I've been looking forward to this particular live stream for quite a while now. Before we go into having each one of our incredible VCs introduce themselves, I just want to remind everybody that this is going to be a panel. It's going to be a little bit different format. Normally we do a recording from the conference. Well, the recording will still be uploaded to YouTube after this, but we thought, why watch the recording when we have the panel here live? Let's just go into a new panel, ask whatever questions we want. So as they're introducing themselves, for all those out there listening, go into YouTube comments, and yeah, we can't wait to get to answering your questions live. But without further ado, let's get to our incredible panelists. So I'd like to ask Simran first. Would you mind giving a little bit of background and introducing yourself?
Sure. So my name is Simran Singh. I work at GSR, which is a leading crypto market maker for about 300 protocols globally. We've been around for 10 years, and one of the key things that we focus on is partnering with projects and ecosystems at various stages of their life cycle. So VC is certainly a core tenet to that ethos.
Awesome. And we've got Sal. Why don't you give a brief intro of yourself?
Happy to do that. Thanks, Isaac. My name is Sal Ternello. I'm a general partner managing the Tomorrow Fund, which is an early stage Web3 venture fund, taking an ecosystem-driven investment approach, investing across 6 different Layer 1 ecosystems with a near and dear fond place in my heart for the IC. We've invested across infrastructure, protocols, middleware, and apps. We're very, very developer community centric in the context of where we deploy. So middleware has been a huge focus past the protocol and infrastructure days. In that context, we've invested in the IC ecosystem in projects like Departure Labs with Hazel, Infinity Swap, and some others. And there's a number that we're looking at today with great founders that we're excited to deploy in over the next couple months. I've been in the crypto industry for a decade, started at KPMG, built their consulting business in the US, and before that developed the first version of institutional custody at State Street. On the IC side, incredibly keen on the technology and ecosystem, and we'll talk more about that in a bit. So thank you for having me, Isaac, and looking forward to the chat.
Awesome. Great to have you, Sal. I really appreciate it. And we've also got the one and only Philip. Oh, Philip, you look like you might be on mute. Let's see.
Here we go. Philip Stauffer. I'm a co-founder at Firefly Venture Partners. We're based in San Francisco and Zurich, Switzerland. Which is also a hint how we got involved with the IC. Obviously, there's some overlap there in terms of locations. And we got really excited about just the ambition of a full decentralized compute stack. That was kind of the initial spark of why we got really excited about this. We think, however, Web3 is an evolution and not a revolution. The dream of the internet was always to be decentralized, and in the middle of it, it got corrupted by human beings. And Web3, we think, is another attempt and opportunity to actually really get it done right. And so that's what really drives us. So our fund is a mixed fund. So we have both Web2 and Web3 assets. We actually also have an interesting lens around what's happening in the transition of Web2 to Web3. And there's a few really interesting companies who build capabilities in that area, like Edgewana, for example, where we're an investor. We invest both in Europe and the US. So we're excited about both areas. We would love to invest in Asia, but we're a small team and don't have the capacity for that yet. And we invested in ICP, but also in companies such as Portal, NFID, Discover, Departure Labs, and others. And we're very excited about where this could go.
Awesome. Definitely some big names in there, recognizable names everybody in the ecosystem looks up to in those brands. And we've got Roald.
Hello, welcome everyone. Thanks so much for having me on this awesome panel. So my name is Roald. I'm part of Illusion. Illusion is a technology investor from Belgium. Rather small team. Already made like a little over 10 investments into sectors from blockchain and other digital technologies. And apparently also infrastructure. That's how we got into the IC actually. We just saw a great vision like Philip already enlightened. We saw a great vision, but more so just an excellent team when it comes to the researchers. and everyone there still today. So about 2.5 years ago, we entered the ICP ecosystem through hosting nodes. So we're an infrastructure investor at the moment. We're still looking for other teams to come up with technologies and products that we know or have some expertise about before we invest. That's really what we are still keen on finding out. And next to that, we have been active also in contributing to fundamentals, blockchain, developer packages with Aviate Labs as an actual venture studio, for which we hope that we can empower some entrepreneurs, some other teams, and actually build some applications on the internet computer.
Awesome. And yeah, the work you do with Aviate Labs is great. As a dev within an ecosystem, I've used some of the packages myself. And yeah, no, it's really great stuff. And, so the last time we were all together was back in May for the ICP community conference. And, it's been a few months. Things are always changing within the ecosystem. A few months can almost be like a few years when it comes to Web3, right? So coming out of the conference, I just want to, before we start the rest of the questions, get an idea of what did you think of the founders that you met? Because I know that you probably had met some of those founders for the very first time in person. Maybe you had video chats, but a lot of those you probably met for the first time in person. And what do you think about the state of the ecosystem right now? Maybe is there anything that you would want to see more of or less from the builders out there who might be? And I think this would be something I'd love to hear kind of each of your perspectives on. So maybe we go through the same order and just kind of get, I guess, your pulse on where the ecosystem is. I think that'll be a kind of a great way to kick this off. So yeah, Simran, why don't you kick us off? What are you thinking about that?
Yeah, sure. So I was going to say it was certainly a group of passionate, young-driven entrepreneurial individuals, and it's always exciting to see that mindset when you're building, especially in this space, despite the various amounts of adversity you see. Certainly, like a numerous collection of projects that I met during the conference, and then even followed up with afterwards. The one thing I would continue to say is kind of what we had mentioned on stage during the conference as well, which is you have to ensure that you have the right product market fit. You have to ensure that you're solving a unique problem and that you have a diversification element that distinguishes you from the myriad of other projects that might be trying to build in the space, but more in the Web2 landscape. That's really kind of the crux of it. In terms of the shape of the ecosystem more broadly, I think, from the building perspective, I think the pace has continued, if not grown more so, with the regulatory narrative kind of shifting in terms of the tokenomic side of things and how alternative assets are viewed. I do think it's broadly bullish for the crypto ecosystem as a whole, and that'll only benefit the IC community more broadly, I would say.
Awesome. Maybe I'll follow up and build on that, Simran, if that's cool. I emulate a lot of what you said. I thought the energy down in Miami or north of Miami was fantastic. I think the vibe, as you would describe it, amongst the team was very build focused. It was not focused on a lot of the speculative dynamics and topics that you see at more mainstream circuits. And I think the dedication of the developer community in the IC has proven itself to be stickier in many ways in retaining high caliber developers and teams versus other layer one ecosystems that often have arbitrage of developer teams to build on the next EVM launch or some crappy alternative L1 that came to play in 22. And so I think that stickiness and retention factor will start to manifest in growth as we're seeing in numbers and data today around the dev community. And I think there's starting to be an interest peaked in other dev communities in terms of the technology that underpins the internet computer and some of the attributes that are now being developed on top of, including HTTPS call requests and the ECDSA API. Which obviously NFID and many others are playing around with. And so I think we're in this phase now where all the organic fundamentals on the dev community side are starting to catch parity with the platform technology features. And soon we will start to see breakthrough opportunities, probably at the app layer, where the problems that are pervasive in the Ethereum community and others around user acquisition are solved through some of the technical advances that are apparent inside the IC, reducing user acquisition friction and really the understanding of touching Web3 at all. And so I think all those things are extremely bullish. I think on a sentiment basis, we've seen a lot more warmth from a broader sentiment check across different social channels. And then I think the fondness of the allocation landscape is starting to return. So as in every cycle, we see a retracement of interest from the venture allocator community that has, in my opinion, weaker conviction behind their theses towards the Ethereum L2 environment and projects building on Ethereum. And obviously behind that, liquidity follows. I actually think liquidity follows the venture allocators many times, which we can contest and debate. But I think that leaves for an even wider mispricing and opportunity in the alternative space. And so I think the IC shines in that regard. And in this next cycle, I believe that there will be a greater degree of sophistication from the buy side participants, both in the private market category as well as on the retail side to some extent. And I think that the IC is going to play extremely favorably in that narrative. So candidly, all good things. This was not always the case for me in terms of assessing the ecosystem. If you had asked me 18 months ago, I probably would have had a different take. But I've seen an incredible amount of positive movement in different areas that were self-identified areas for growth. And so super excited in what I'm seeing across the ecosystem, the tech stack, and candidly from the demand on the buy side from venture allocators that are beyond the seed phase, which is a huge issue in many alternative L1 ecosystems and in the IC as well. But in my conversations with major household names on the buy side, there is interest to revisit the technology and teams that are building here in a way that there was not 12 months ago. And so that's a super, super exciting lead indicator to me that tells me that there will be further financing and allocation into the growth of the ecosystem to match some of the growth in the developer community side.
Oh, wow, great input. Thanks for sharing. And I think a lot of people in the ecosystem will appreciate kind of hearing that, because when I talk to founders, they can see that they're facing the consequences of that withdrawal and interest that you mentioned, right? But you, at your level, you're the first to see when things are shifting.
Yeah.
So I think that you just helped provide a source of encouragement, at least for a lot of the founders within the ecosystem that I've spoken with. So appreciate that. Thanks.
But let's be candid. The last point there, the last 6 to 9 months were the hardest time of venture allocation and financing probably ever since 2000, 2001. And so to the extent you've survived and you can push through and persevere in the next 3 to 4 months, you will likely thrive as a result of just surviving. So I'm confident that the tailwinds are coming for you guys.
Yeah, no, I just wanted to add, it's interesting that you say that, Sal, because the sentiment definitely changed. I think around crypto in general, but then around the IC as well. I definitely see more interest of venture firms who did not look into this particular asset before. So I definitely have more discussion. We have more discussion around that across the team. And then the other thing I wanted to mention, the whole, as you say, the whole venture allocation space has been very difficult, right? Not just with crypto. Crypto has been double difficult, if not triple difficult. And so if you work on something that actually also benefits the ecosystem at this stage of the game, I think that's something that will pay out, right? As the ecosystem succeeds, you build something that the ecosystem overall and other players in the ecosystem can benefit from. Those are ideas that really accelerate success very quickly when times change, right? For the positive again. And so if you look at our investments, right? Our investments were more kind of on the infrastructure layer. All of them, if they succeed, they also benefit the ecosystem overall. And you made an interesting comment, Seller, on the application layer. We see it very similarly, that soon it will be time to actually go there as well, and have impact on the app layer, which was so far kind of, we just had to work on the table stakes and the basics. That's an exciting next stage. I think that inevitably will happen in the next, I would probably say, 12 to 18 months. The other thing I think that is important to see is to step a little bit back and just compare to other tech cycles, right? It's always been the case that we always overestimate the short term and underestimate the long term. And if you build serious things and are not just in for speculation, you will eventually succeed with big trends like this. tied to the overall vision of a complete compute stack is just very powerful, right? So sometimes if you're an entrepreneur, and even us as investors, right, we invest and we expect things to go faster always than than they will eventually. But if you stick to it and you just focus on quality as builders that benefit the ecosystem, you will eventually succeed, right? And even if the ecosystem at the end doesn't succeed, it will be worth the time and effort because it's a very big vision, right? So that's kind of our mindset in this. That's why we stick to it. And as Saul said, the sentiment is definitely changing. You might not feel it directly yet, but because we have so many data points and so many discussions across other crypto assets as well, I'm just feeling very positive about it.
Oh, that's great.
Yeah,
I've always, whenever you talk, I love hearing your enthusiasm, Philip. Sorry, Rolf, go ahead.
No worries. I think I can also jump in there, and I see that many VCs in general, and since we're also like not investing solely into blockchain, it is not solely in blockchain or crypto space that everything has dried up. It's just like a very stressful cycle in the economical system as a whole, and even globally. So I think many founders might be discouraged from not finding funding, or I just see it that they're really trying their best and trying to find funding or see that there is funding lines available 3-6 months down the road. But it's really, I just want to stress to all the founders as well, like keep an eye on your finances and how much you're burning, and try to just keep on doing what you're doing right now, but as efficient as possible, because we just know there will be an upcycle again for every sector and the economy as a whole. So it's just waiting for that to catch traction again, and then you are good. There will be a market for it if it's a wise product that you're making, if it's a useful infrastructure tool that you're making or building. So it's really like keep track on the things that a business has to do, which is like running efficiently and doing it with people that are intelligent, that are highly skilled, that have knowledge about what they're doing. And I think everyone can agree that's exactly what we found also in Miami at the conference. There are entrepreneurs, sometimes very, very young, but that have been in this ecosystem, not just ICP, but outside as well for many years, sometimes since sort of the beginning. So I think we're strengthened not just with Team Definity, not just with the investors, but also with the builders that are highly skilled. And I guess that's also what some investors coming newly to this ecosystem are seeing now as well, that the builders in it do see the vision and do see how it can translate into something. And we're still, I think, very much into the infrastructure space, not seeing too many application layer consumer products, business enterprise products, or visions into what some people are building. But I guess it's a matter of time, and I have seen an acceleration in the past few months, which is also something that we would like to push for, and definitely on the regulatory aspect. Just someone in the past week told me about how important it is that you need to try to understand the regulator and what drives their decisions and what might change in the coming years, be it elections that influence this, be it some like macroeconomical cycles that influence it, because those sometimes present the waves that we should catch, or that you as an entrepreneur should catch. And I'm sure that there is some person or many people in this ecosystem that will be there at the right point when there is such a wave coming. And it doesn't always have to be negative, whatever the regulator says. Definitely there are some interesting pieces out there that people should look into.
Yeah, and it takes me back a little bit to Laura Cole's talk as well, where she basically said that, anything's doable. There's always a framework for making something doable, right? It's never like it's 100% impossible to approach whatever you might want to build as a builder. It's just a matter of getting your legal framework down right. So yeah, that's some great input. One of the first questions I want to pull up right now was from VC Impulsa. She said, how do you view the role of networking in the success of a startup? I think I'm going to rephrase this a little bit, though, because I guess really what it ultimately is about is like, how should an entrepreneur reach you if they're trying to reach you for pitching? I think a lot of entrepreneurs kind of get caught up in that. And, from my view within the operations with Cedric, I come from a background in sales, and it's been so surprising to me to see somebody send an email to a VC and then never send another one. And I talked to them a few weeks later, and they're like, "Oh, I didn't hear back," so they gave up. I'm just like, "What?" Like, if I did that, I would not have made my quota. Like you just like it was. But I understand there's different like dynamics there. So like, what would you say to that? If you were on the other side of it, like how would you go about trying to reach yourself, essentially? Like, yeah, basically.
Yeah, maybe. Hey, maybe to your point of I've been in sales as well, and there's a famous statistic: you need to contact somebody 13 times until you actually get traction. That might not be the first response, but until you actually trigger the interest. So yes, definitely don't give up. You have to consider it from our side too. We're flooded with emails and approaches. The easiest ones for us always are the ones that come through a referral, right? Particularly in a specialized space. If for example I get an email from or a message from like one of the panelists, there's a certain level of trust. We know, hey, that person has background in this space. They're part of the ecosystem. They believe in somebody already. That's already a good filter, right? So it's always best, in my opinion, to get an introduction to somebody you want to get to. And that's, for me, actually, independent of crypto or not crypto or whatever you do, is always kind of the best approach, because trust matters, right? That's one thing. But the other thing is just reach out to people as well, right? Like I get many times excited about things. I realize as an investor and as an entrepreneur as well that I just don't know what I don't know, right? And if you get engaged in a discussion with somebody who just tells you something surprising that you didn't think of, I immediately get excited. That's why I do what I do, right? Entrepreneurs and investors are very similar in that, right? And if you trigger a discussion versus just a pitch, that's something that goes far, right? So it's a little bit related to networking, but also around how you actually drive a discussion. When I pitched as an entrepreneur to venture firms in the past, I always tried to put myself into the mindset of, I'm not pitching this. I'm actually trying to have a discussion about the opportunity of what I'm working on, right? And getting input and advice as well. And if you make it kind of if you have that type of mindset, I think it leads to better networking and to better pitching and to and then to actually a discussion where you get something out of. And the venture firm on the other side doesn't feel like they're pitched to, but they're actually learning something and eventually tapping into some undiscovered opportunity. That's kind of how I usually perceive opportunities the best, right? If I get involved in a discussion where we share insights and knowledge, and oh, by the way, I'm building something around that, right?
Just to build on top of that, I was going to say, I mean, my personal view is I view a lot of things from like a risk reward framework. So putting on my trading turban, it's more of like, reaching out to people, the worst you can really hear is no. Versus the upside convexity that you have in someone actually, taking the time to understand what you're pitching, or more specifically the problem that you're trying to solve and the narrative that surrounds that. I think that holds way more weight and impact than anything else, right? And so again, the worst you can hear is no, but the best you can hear, to the point that was being made earlier, is like, hey, if I know someone that can refer me to a VC, that can refer me to a market maker, that can refer me to a solutions provider, that can refer me to someone who might be building on chain or collaborate with the application that I'm building, those kind of things just have natural synergies, and it's a mutually beneficial thing. And the thing that I've come to really appreciate, love, and admire about crypto is the sense and ethos of collaboration and mutually assured benefits, and the fact that most of us, at least the ones that have survived the various crypto winters over the past decade or so, believe in is the idea of collaboration, building together. And so casting a wide net, being thoughtful about the actual narrative that surrounds the project and product that you're trying to build, and being very clear about the actual thing that you're solving for and what the distinguishing and unique idiosyncratic factor might be, I think does a great job of kind of helping build legitimacy, helping build trust in what you're building, and also just building stronger relationships and networks from that.
Mm-hmm. Yeah. I can maybe add to that I think it's a good question, and it's phrased good, because networking as a whole is, I think, very elementary for the core team of a startup, and preferably like the founder or the CEO, because if you're good at networking, so if you're good at reaching investors, you're probably also good at reaching the right people when it comes to strategic partnerships, when it comes to customers, but also to like the best talent. So just try to see it more as a skill as well, that you need to enhance or that you need to be good at. And in whichever startup you do, it will always be slightly different to do networking right. And some people might be better in it. Some people might need to work on it a little more or do it their own way, because everyone is different, of course. But really try to network and see it as sort of a challenge. How am I going to reach this person? But also, and I assume this is more a question for early stage startups, try to see like which VCs or which investors might be the most relevant for me or make the most sense for me. And then try figure out where, if you would be an investor in that space, where you would be looking. So on which forums, on which Discord channels, all kinds of ways to just show something that you are building, like a product or blog post or whatever, be active in those channels and communities. And I mean, it's their job also for investors to find the right cases. And I know most of us probably are active on these channels because it's of interest to us, that we like the internet computer, we like blockchain technology. So we are reading and we are there to see what's happening. So that's one way, I think, like the insiders, be the insider and be part of the community at first. And then indeed, like coming through referrals is, of course, it gives you some credibility and background. If it's sort of verified by Philip, for example, then I know it's probably worth looking at. Shouldn't be the only thing you look at, of course, but of course it's one way to go to. And that's, as soon as you have one investor on board, it's definitely worth it to keep talking with them and see your fundraising process as a continuous process. And it might require an investment from you as a founder for 2 years to get to know some investor. It might be too soon, but you keep the relationship, you keep building the relationship until it might actually be a fit or work out. So really think about networking and relationship building with investors, especially as an early stage startup, and try to surround you with some good advisors. And many of us are just excited about giving advice as long as our agendas allow. So definitely like try to go for advice, I would say.
I mean, I don't want to beat a dead horse here, but I'll expand on one point and reinforce another through a lesson that Tom Saris, my partner, shared on stage and at the conference and shares with all of our founders. But in the expansion of this idea of networking, he tells everyone, and I agree now after a couple of years on the buy side, is that as a founder, you're always raising. And so you're networking consciously and you're building a social graph and you're creating relationships and trust from the day you start the inception of your vision to your IPO, if that's the path you take, or your SNS launch, if that's the way you go. So that's a mentality and a mindset and a fundamental skill that is required to be an effective founder and to be able to go beyond the early stages of your business. The second point is on this like referral and relationship networking. Completely agree in this regard. And I would expand on that to give you a hierarchy of contemplation in how I think about deal flow and asymmetry as an early stage venture investor. I respect every person on this line and I will give credibility to every deal you share me, and I'll always take the look. And so that's a guarantee that on the second level of referral is a higher guarantee than what you get random cold inbound. The second level that I cherish and call platinum quality deal flow is when you have extremely early stage founders who love you and you've helped them, and they turn around and present you to their top 2 or 3 founders over a 6 to 9 month period of time. First money in the door, first $250,000 that you ever see from the outside perspective, generally favorable terms. And founders' ability to assess other founders is equal, if not greater, in my opinion, often than venture investors. And so when I have top of funnel founder referral from somebody that I believe in, have invested in, that has executed in hearing our guidance and now delivers XYZ friend from their prior life that they built with, who's incredible and they're building this cool thing, absolutely taking that call, and I'll do it in the next 48 hours. That's not the same sentiment that I have when I have VC inbound. I always take the call, but it's into a scheduling process on an agenda time management system. It's not drop what I'm doing and get on the phone. So that's just kind of my take on hierarchy of referrals. And it would be founder to founder, then venture to venture, then kind of service providers, market makers, things below that.
Yeah, perfect. And all of this is great info. I think this is really useful because a lot of the builders in our space, and y'all have seen this. I mean, they're devs. And I think that, you know, there's a difference between a dev and a founder. A dev can say, I don't want to put myself out there and just be a great dev, and that's fine because that's their job. But if you're a founder, like y'all have said, you need to get into the habit of putting yourself out. You can't go from a dev to a founder unless you're just willing to put in that habit. So for those devs out there who are working on a project and who want to be founders, just get into the habit of whatever, you know, at least one thing a week, whatever it's going to be, whether you're attending a conference like the conference we're going to have next year, the ICP Community Conference 2.0, or it's, attending live streams like this. We're going to have speed networking sessions. So this is very relevant. I mean, this is exactly the kind of opportunity where you can practice these skills. And then we're going to have, like Code State, we're basing ourselves around this. So, even going to Matoka Bootcamp, we break people up into teams. Those team members might become founders that get invested in by one of these guys, right? So make friends with them, now, keep in tabs, even joining Twitter spaces. I mean, we all kind of see the same icons joining the same Twitter space. Those are people that are building that recognizability. And then, the Twitter spaces, well, lo and behold, they're usually hosted by a founder that one of these guys have invested in. So they see you in their space a few times. It's really not that hard. It's just a habit and a willingness. If you don't have the willingness to put in the small steps it takes to get to a habit, you just don't get a meeting with these guys. But that's because you haven't taken those small steps, right? There's no, you might be a great dev, then find a job as a great dev for another founder. But to get to that level, you need to put in the work. So it's not, don't be intimidated. And we're Code State and lots of others are creating opportunities every day for this. And so shifting gears to the next question here, by David, what are the most common mistakes you've seen in entrepreneur pitches? And I would add that if there's any funny stories you can legally share, that would be great. But I've seen a few strange ones myself.
I'll give maybe one good, one bad real quick. I'll start quick.
Okay.
On the good side, in the context of metaverse and VR, I had a founder launch into an experience in a full haptic suit. We invested in Somnium Space, and Artur pitched us from the metaverse, and it was incredible. He's in a real persistent stateful reality world, driving around in his car that's an NFT, and people inside the game in real time are talking to him, and he's like, hey guys, I'm on a pitch. I'm sorry, I'll talk to you later, right? That's an incredible experience. We feel the tech right away. On the contrary, when I get on the phone with a founder and explain to them, I want to start with personal introductions to understand you, who you are, what you've built. And they come back to their deck 3 times and try to pull it up on screen over and over. Part of my assessment is I don't want your scripted deck that you've prepared for 12 slides and done 100 times. I want to know you, and I want to understand your fundamental ability to think and to challenge and to dialogue, discuss, debate. So my biggest turnoff is, and this is something you have to play out because it varies by venture fund and who you're talking to. An analyst might want you to run through the deck. The GP or partner might not. It depends on who you're talking to. So you've got to have the versatility or agility to know your audience and customize your pitch to that person. But for me, I think my biggest thing is like, if the investor leads you to a position of have a discussion and then you shove a deck at them a bunch of times, it's like a switch that gets flipped off in the first 5 minutes. It's really, really hard to get me back at that point. Cause I'm like, I don't even care what you're building. I want to know who you are and why you're the person to build this thing you're telling me about.
Yeah, no, I was going to say, I mean, one of the biggest challenges is you can build the, most cool product, most advanced technology ever. But if you can't explain to someone off the street why it makes a difference either in their day-to-day life or how it's truly disruptive and what actual problem it solves, it's kind of hard to justify whether you're putting money into it from an investor or even just trying to get active users to engage with whatever you're building, right? It's like the example I often give is like if a grandmother in Oklahoma has to take 20 steps to send her grandson money to buy coffee using like MetaMask and things along those lines, that's really the friction is significantly high where people are just not going to want to engage. Versus if you think about something like Apple Pay where I can simply buy a cup of coffee with my phone, it's a very seamless transaction, quite disruptive, but I don't even have to think about the technology on the back end because I can see the impact of it in the most quick and efficient way possible in the 5 seconds it takes for me to just hold my phone there, right? And so the narrative that actually underlies the product that you're building and having a sense of what the competitive landscape looks like, what your distinguishing factor is, and I know I keep harping on that, but I think that really is the key ethos that will kind of help you scale, help you actually build, and actually give you legitimacy.
Great.
Yeah, maybe
And-
maybe I make a quick a quick comment on it. Builds a little bit on what we heard from both of you right now, which is so entrepreneurship in general is a very hard journey, right? And a lot of people jump into it because they think it's just cool to be an entrepreneur, and we try to avoid those type of entrepreneurs. It has to be it's too hard to survive if you actually don't have a true intrinsic motivation to solve a problem. That's kind of our experience. And so what we try to figure out when we are meeting an entrepreneur is what is the connection between who that person is to the problem, right? We want to understand the person, as you said, Sal, but also the problem they try to solve. And in the best cases, I have to tell you, like the cases where if I look back at successful entrepreneurs I know, there's some connection between the past of this person, how they grew up, what they studied, what troubles they ran into, and the problem they want to solve. And if you run into somebody who has that very deep connection to that kind of mission of solving a problem, then you run into an entrepreneur who doesn't just give up when they run into the first barrier, right? And so those are the those are the people you try to fund, because particularly in early ecosystems, let's say like the IC, you potentially fund an idea that will be completely different when it's successful. And so if you fund an entrepreneur who has a very deep connection to a problem, they will be able to pivot because their mission is to solve that problem, right? And so it's also a good due diligence with yourself when you start a company, actually independent of investors, but are you actually passionate enough about solving the problem, yes or no? And if you have to say no, then maybe you give up after the third barrier you run into, and you will for sure run into 10 barriers that are very hard to climb, and you need to be ready for it, right? And investors can only help you that much. We might be able to help you get over the second, but then we won't be able as early investor to help you get over the third, and then everybody loses their money and effort and time they put into it, right? So I think for us, it's very important to figure out that connection between problem and background and who that person is, for us to be convinced that it's a fundable initiative, if that makes sense.
Yeah. Well, and I think to add on the actual pitch delivery, so I totally agree with the slide decks. Like nobody actually wants to see the slide deck at the first pitch. We really first want to see, okay, what is the person like? Intrinsic motivation is the best, but then do you really understand like what you're building, and can we commercialize it? Because otherwise there is no way of surviving for a company, let alone grow it and have a potential way of exiting. So that they really understand like what is the problem. And if you're very close to the problem that you're solving, usually it's pretty easy to explain it, or they will be like, oh, it's easy, this is what it solves. But sometimes also because we're very passionate, or we see very passionate people about blockchain or about new technologies, AI, metaverse stuff, it can get very complex very early or very soon. And it's very important that you keep a focus on where are you actually going to make money and spending resources, and what is just fancy features. And I see many decks are just 90% talking about the product, what it does, maybe also how it works. And I understand if you're a passionate developer, you want to share this, and it has at some point needs to be shared. But try to focus on, okay, what is the opportunity is presented here to the investor, because you are the expert actually building it and executing it. We as an investor should look at the business case. Is it a viable thing to do? And up till now, what I've seen is the best companies have the most simplest business case or the most simplest way of solving the problem, so that you can just know, okay, this works, I can find customers for this, and then it's just repeating and repeating. And because it's digital technology, it just repeats itself almost. But really try to deliver the message with, this is what I'm solving, and this is how we focus on scaling it, or bring it to scaling. And this is why we actually need your money or your involvement in this as an investor. Not just showing fancy slides. And we all love your products, and we all have insane respect for what everyone is doing. But just show us first the business case, and then we are happy to try it out ourselves as soon as we're interested.
Awesome. This is all, like, we need to turn this into short form video clips and get it out there so that these entrepreneurs are all aligned with this. So we have time. We have like 3 or 4 minutes before we get to speed networking, but I thought we could make this a quick one from Raphael. Which are the types of companies or industries that you're most invested in right now? I think maybe the way to think about it, like considering the audience is ICP builders. I know, for example, that Cedric has like a specific slot he wants to fill in his portfolio for like a stablecoin project, right? So are there any slots that right now you really want to fill this slot in your portfolio? You're looking for a specific type of IC project that you're kind of shopping out there for? Maybe we can, if it's something you can share, then we can share it and maybe help you find that person that could be listening right now.
Well, let me quickly jump in. So for me, it's difficult to say what industries or companies in general, but maybe that's helpful for the audience, the entrepreneurs out there. I think we can draw a parallel, for example, to what's happening with AI and ChatGPT, for example, right? Like, AI is around for a long time. It's also something that was overestimated in the short term and will be underestimated in the long term. And interestingly, we had very interesting projects, right? Like, okay, machine beats the best chess player, machine beats the best Go player, but all of that was still kind of in R&D land, and nobody really cared, really, right? From a commercial perspective. And then we had this tipping point suddenly of ChatGPT, Microsoft, and OpenAI getting together and actually coming out with an application that suddenly showed a broader mainstream audience what it can do, right? And everybody had this holy shit like moment. But it's not like it's new, right? It's been around, and it has been built over many cycles and iterations, but it was kind of the first moment on stage, right? That really people started to pay attention. And so what I want to say with that is, if you think about infrastructure being built like the IC, there's amazing things being built in the background that nobody has seen yet, right? So as an entrepreneur, think about what tipping point does the ecosystem need in order to get that visibility, right? And if you build that type of tipping point where it gets visibility that way, then this will take off, right? It will get the visibility, the attention, and people will realize, wow, what actually was possible on, let's say, the IC is much better than what's possible on other protocols or in Web 2. And I think the IC with its capability, it has the potential to provide eventually those type of use cases. And those are the ones we're most interested in, right? So that's a little bit a different way to answer the question. But we are extremely interested all the time to find these tipping points. And we want to invest right before the tipping point happens, preferably, of course. Everybody wants to. In post-mortem, those tipping points are very easy to see. But if you're in front of them, they're very hard to recognize, right? So that's kind of the critical things for us and also entrepreneurs to get right. But think about those tipping points, right? And they happen not just in AI; they happen in cloud computing. They happened around when Werner Vogels at AWS finally got to shine on stage. It happened with software as a service, with Salesforce, that became the icebreaker of that tech movement. So it's not different here, right? So think about those tipping points. They will be crucial.
Yeah, totally. I think that comes back to what I stress with look at the regulators, because they are usually the ones that have the largest amount of power causing certain tipping points, or look for chaos or disruptions, or like, I don't know, some kind of waves in society. Those usually inflict tipping points. Maybe not. So we almost see blockchain as being its own sector while it's a technology, and you should, as a founder, just look at, okay, how can we use this technology to do something in a sector, to to optimize certain processes, or make money in some way for other people. Usually that works best to sell a product. I think there with the IC we just have a potential to do efficient and new ways of content delivery, especially looking at content that might need certain security or access rights, access management, bringing us to actual identity management. I think it's pretty powerful in that field as well. Those are just a few. If you are looking for inspiration, I think when you want to connect AI with blockchain or IC, just go to Hugging Face if you don't know it already. Do some searches about things that are living there. It's an awesome index of open source AI models and projects that developers build, and just try to see, okay, how can we connect this with IC? Is there a use case for it to be on the IC? But absolutely do not start with some kind of AI project that is actually a feature and will be incorporated into Google, Microsoft, OpenAI, whatever, in 2 months from now. Because that is usually, it may sound fancy and it's pretty easy to set up, but everyone already runs about 5 agents in their email client right now, probably. So don't always think about, is this a future or feature, or is it a product? And it should be a product.
Yeah, no, I was
Great
just going to
input.
say. I was just going to say, I mean, yeah, the regulatory angle cannot be underestimated, to Rolf's point. Like the shift in sentiment you saw with, certain tokens that were named securities by the SEC and CFTC. I think like that has been one of the key narratives that's driven, a lot of price action over the past few months. And when I think about what motivates people to build, obviously, like there is the desire to cause a, actual change in the world and shift in the broader scale of things. But like the economic side of it is obviously a key component there as well. But yeah, the regulatory angle is, I think, going to be one of the big ones.
Yeah, and this tipping point analogy or kind of like frame of reference is really, really compelling. And if you look at AI in 2023, when I was building an emerging technologies team at State Street, looking at machine learning and AI and deep learning and neural networks in 2015, it was here and it was going to change everything, right? And that was 2015. We're now 8 years past that point where tier one enterprises were experimenting with the edge of machine learning and AI, which, by the way, wasn't possible prior to cloud, right? There really was no way to scale the underlying infrastructure to drive scale machine learning and AI applications. And so if you take that similar time horizon from kind of peak initial speculation to the tipping point, that's 8 years of time from 2015 to 2023. And you could call it 2014 or 2013, call it 10. 2017 was the first speculative cycle in this space where the opportunity and vision of the technology and the applications that we will build together became real for many. 2021, 2022 was the first cycle where we had real material investment, development of infrastructure, et cetera. So I think we're closer to the tipping point than many may realize. And I think this tipping point will represent convergence of these different adjacent technology swim lanes in a way that's super, super powerful. And so this is one of the areas specifically that on the internet computer, not looking for features, looking for products that demonstrate what those that have been in the blockchain space for a decade realize, which is the root cause or the root problem of most machine learning and AI applications in the AGI space at scale come down to data provenance and the training process. If you can provide immutability over cradle to grave, data attribution and decision models from humans that are training them, you can provide verifiable, independently, proven models. And that's what's required for these things to achieve scale adoption inside of regulatory compliant boundaries. So I'm really, really excited about products that are built on the IC that solve problems in AI that are being discussed on Twitter today, but really haven't hit the forefront of impact to society. And then I'm also interested at a lower level in specific domains. So I want to see things that are built using features of the IC that are not possible elsewhere. The ECDSA API, HTTPS calls. And then I'd love to see the idea that the IC can expand and interact across different heterogeneous networks. So I see a world where the IC decentralizes the front end and becomes the console to manage assets across different networks, including Bitcoin and ETH. Obviously, that expression has been demonstrated with CKBTC. I can't wait for InfinitySwap to launch the integration on the EVM side, right? Once we have a front end decentralized interface that can interact and control assets across ECDSA and EDDSA chains and all of EVM, we're in a very, very disruptive space. And so those are the areas on a technical basis I'm most excited about over the next 12 to 18 months. And again, I think there's no other global computer that is positioned to do these things. And so I encourage people to build in those directions to show off what the IC can do.
Yeah. And I think, Sal, maybe it might be a controversial statement, but I think blockchain might not have been possible before IC, just because looking at how we do infrastructure is fundamental to all the performance benchmarks we can break at the moment. The lowest cost, the high speeds. And we do see many struggles still, but I think it's just like a year away or something before we see this inflection point where suddenly we can harvest the potential of blockchain. That has not been possible because you should have insane amounts of money to run and even code the smart contracts. While now it's just like almost one click and you have content delivery in a secure way, whatever you need. So I think, that's what is ahead of us.
Awesome. Wow, great panel. Thank you so much for all of the insights you've shared. I think it's going to be incredibly helpful to a lot of the builders that I interface with on a day-to-day basis. And I just want to thank you for taking the time and for all the support that each of your funds have given, all the initiatives that Code and State has done, and also just for all that you do within the ecosystem to help provide the encouragement and and just the liquidity, the drive, the enthusiasm that keeps our founders building. And so with this, I'm going to shift gears a bit. We're going to have the speed networking, but a couple small items I want to go over. So next week, we've got Barry Paisley, and co-hosting with me will be Aaron Bremster. That's Thursday at 8 a.m. PST and 5 p.m. CET. And for those of us who are on the ambassador program, it's investor panel for this particular live stream. Announcements were just made. In fact, I think it was either today or yesterday. So go ahead and check out. You can see even my Twitter or at Code and State to see the article with more information on the ambassador program that we have going on. And for the speed networking, so I'm going to be sharing this URL both down here and up in this top corner. So whether you want to scan it or type it in, we also, Esteban is going to be adding it into the live stream chat right now. So the way this works is when you click on the URL, you'll spend a couple minutes just basically making a profile that has your name and maybe you write a sentence about what you do. And so after 1 or 2 minutes of that, it'll automatically set you up into 5-minute calls, one-on-ones that are randomly set between anybody who clicked the link. So we wanted to do this for 15 minutes. That means 3 people in 15 minutes, which is pretty great. It could be one of the panelists. It could be myself, somebody else at Code and State, somebody else from the ecosystem. It could really be anybody. This is a lot of fun. We did this in the January Motoko Bootcamp, and the students had an absolute blast with it. So I've kind of wanted to find an excuse to do it just publicly with the open ecosystem. So this is a bit of an experiment for sure. But yeah, we had just talked about the importance of networking and putting ourselves out there. So this is your chance. And with that, we're going to say it goodbye, and we'll go and start the speed network. And I'll leave the screen up here for just a little bit longer for those who might want to scan the URL or see the live chat and copy the link. But yeah, thanks for everybody out there. Keep fighting the FUD and stay bullish. We'll see you later.